Hi everyone, my name is Dr. Sun Liew. I'm host Dr. Sun Liew Show, as well as Dr. Sarah for U.S. Senate candidate show, as well as you Riot and U Vision TV broadcast show. Today we have a special guest, CPA. Joe is here. Welcome, Joe. How are you today?
I'm very well. Glad to be here.
Thank you so much. Can you introduce yourself a little bit for my audience?
Oh, yes. I'm a CPA. I started my accounting practice in 1980 when I was 25. And I decided after a few years to specialize helping people with IRS problems. So I have thousands of cases behind me. And I've learned a lot that most of the information out there that people are told is not right, and it's not in the taxpayer's best interest. And so I've done several podcasts and a few TV and trying to tell people that they should do what's in their best interest and not everything they hear from TV or news media or even accountants that don't have experience.
Great, great. So I have several questions for you. You are very specialty for, IRS tax as a CEO, your company and as a CPA. So I have few questions, professional question. So many business owners or individual, they notice get the audit, right? So people really they don't know how they can avoid those audits. So tell me about how we can avoid that, as well as how once we audit the case from IRS, agent coming, they review all the tax. So how we can win that? Yeah.
Right. Thank you. I've been representing taxpayers in audits for decades. And this year is a very special year because the IRS is trying to collect as much money as they possibly can from taxpayers. And I'm already experiencing things in audits where they don't even want to accept the receipts and canceled checks and even notarized statements from people that in the past they've accepted. So maybe about 10 years ago, I put together 4 parts. I call it my 4-part audit prevention checklist. And it's different than what you might read each year in a paper or something where they say that these are the red flags to, prevent an audit. It's nonsense. What people need to do is, number one, file an extension. A lot of people are in a hurry to file by April 15th. These national tax companies say file by April 15th. The IRS says do it. That's the biggest pool of people that get audited because they got all the returns in and they gear up their audit. Like now, they're gearing up their audit divisions so that by April, the people will start getting audit notices. And the truth is, the IRS has what's called a wage and income transcript. It's a list of W-2s, 1099s, K-1s from subchapter S corporations and partnerships. That usually doesn't settle until late summer, beginning of September, because a lot of payers make corrections. And this year, it's even crazy. They usually give us a 1-month grace period. So the end of January, you send out the W-2s, and then if someone says, oh, there's an error, you change it, and then by the end of February, you send all the W-2s to the Social Security Administration. But this year, they made you send to the employees and also to the Social Security Administration by the end of January. So what's going to happen is if there's errors and changes, the employer now must do a corrected set of W-2s, send it to the Social Security Administration. I doubt they're going to be geared up that they would make the changes, so your tax return might look different than the W-2s that they have on file. You should always wait until the end of August, September, and get a copy of the wage and income transcript so you would have everything that is corrected that the IRS has, and you won't fail the matching program, because a lot of people get letters saying you put this on your return, but our record shows something different, and now we're going to audit you. If you match that up, and if what they have is wrong, and you put a statement on the return saying what you have is wrong, this is the corrected one, you could resolve that and avoid an audit. Now, the other two items, it's a 4-part checklist, is to file by a few days before the end of the extension. So the extension is till like October 15th. And like this year for my 2022 return, I filed like on the 12th, and 6 weeks later, my refund was put into my bank account. People think if you e-file, oh, you get your refunds quicker. But now they're processing paper returns, which is my fourth item, is that we file paper returns. Because if you file more, if you're a practitioner and you file more than 10 returns, they force you to e-file everybody's return, which is not good, because a lot of people's returns are not very simple. They have extra deductions, uses of vehicles and other types of expenses, and you need to put explanations on the return. Now, a year or two ago, the tax packages, they expanded the Schedule C, the self-employment schedule, so that you can write explanations in. But if you want to attach any documents, you have to have a separate PDF because they won't attach it to the e-filing. If they cared about taxpayers avoiding audits, they would let you e-file with any attachments and statements that you want to make to explain your situation to the IRS, and they don't. So in the past 10 years, anytime for the current year, we use these 4 items. Number 1, file an extension. Number 2, file a few days before the end of the extension, which is October 15th. Number 3, get the wage and income transcript and match every item on the return, because a lot of accountants, if you're self-employed, you have 5 1099s, they add them up and put the total on there, and the IRS doesn't know if you recorded all the 1099s or not. So I've had people be audited even when the 1099s were recorded, because they didn't separate each item on the tax return. Very important that whatever's on the wage and income transcript, they can match it up to your return so you don't fail the matching program. And then the explanations. I have clients that use 2 or 3 vehicles and have, odd situations. And if you don't explain that to the IRS, I know a lot of auditors, and they want the low-hanging fruit when there's a bunch of returns to select for audit. If you don't have that matched up and it looks like you took too much expense, they're going to pick your return for audit. But if you explain, taxpayer understands the code and the regulations. For example, if you've used your vehicle a lot and you say taxpayer has a mileage log, taxpayer not only explained where he went, but the business purpose. Each item has its own set of rules. And if you tell the IRS you know those rules and you have the proof, to this day, I don't know one person we've done that for that was audited. And I'm going to warn everybody. I've been warning people on my YouTube channel. I have a official, it's called Killer IRS. That's my trademark. It's an official US trademark. So if you Google Killer IRS CPA, you'll get to me. My website, if I can, is taxproblem.org. One word, taxproblem.org. But my YouTube videos, I do them almost daily, and it's just great, valuable information. And that's the answer to that question. And
great, great. I have also like my one client had an audit even, we go to the, I support her go to the trial,
Yes,
tax,
yes,
after audit, everything is, IRS agent does not agree, both agree, we can file for the tax court, federal tax court to, arbitration. Those person have a second opportunity to go arbitration court and then, tax court. And many my client, they are just dismissed, even does not go there because we provide the supplement to older, her benefit. But anyway, so many people even go to after audit next processing, they are not payment or not agreement. Those they go to the tax court for final settlement, right? So okay, next question. And I am also CEO of many corporation. I think you dealing as CPA, many dealing of corporations office. So tell us the how the corporations can save maybe half percent of payment payroll tax owned, yeah, and as well as without bankruptcy, because people, many people they file. I do filing bankruptcy for my client, but they
okay,
end up, they don't want to pay any tax. They don't want to any pay for any creditor. They can file bankrupt court, right? So
yes,
they
yes,
raise all the debts. So tell me about how
okay,
without going to bankrupt, right? It's like a lot of
good,
money we have
good,
to pay for attorney. So tell about
exactly.
how we can save those payroll tax, yeah.
Well, I don't suggest people do this themselves because collection offices are trained to try to fool taxpayers into believing that they personally should pay for the corporation's debt. And if you don't time things right, they'll wind up levying their bank account. I had an employee, a CPA, that didn't know what he was doing, and he told the revenue officer that we were doing a liquidation, and she immediately seized the bank account. So what I discovered many years ago was that there's an IRS code section 333 to 339, and there's a provision for corporate liquidation. It's different than bankruptcy. A lot of people think, oh, they're liquidating, it's a bankruptcy. No, a corporate liquidation is when you give your stock back to the company and then you take any assets and liabilities, and then the corporation winds up its business. So what I discovered is the IRS is very weak with that. They don't understand the legal part. The attorneys understand the legal, but the attorneys don't understand the day-to-day IRS operations. So there's what's called putting on a new face. If a corporation owes money, let's say payroll taxes they haven't paid, and they decide to set up a new company and move everything over, they'll go after that new company because they think they're trying to commit fraud and get out of paying taxes. But if you follow the rules, and this is why I don't recommend people do this on their own, because you got to know the law and you got to follow the rules. So what I do is have someone set up a new company, and you don't commingle anything. You don't move money and assets from the old company to the new company. The new company can have the same owners, different owners. And if you want the employees to work, you've got to cut those contracts off and set up new contracts. I had a commercial plumber that ended the contracts as a work in process, and his brother owned the new company, and he took those contracts from where it left off, everything separated legally by contract. And so if you drain out the cash, you don't take it personally, the owners, because if they find the money in your bank account, they'll levy that too. Like I said, it's a very critical operation. But in essence, what you do is you get I get an appraisal value of the assets, and we buy the assets from the IRS. So, for example, let's say there's a corporation that owes $200,000 in payroll taxes. It's broken up between trust fund, which is the money taken out of the paycheck, the withholding and the Social Security. The employer is in trust to pay that money to the IRS. Even bankruptcy can't get the employer out of that. But what I get people out of is the non-trust fund, the matching of the Social Security, the interest, and the penalties. And so we get an appraisal value of the assets. I buy the asset, we buy the assets, the individuals buy the assets from the IRS. It's very interesting because the IRS doesn't own the assets yet, but they'll take your money and they'll leave the assets alone because your money is the fair market value, and they won't get more than that if they seized it and sold it. So basically, we leave them with a shell. We have a new corporation. We don't commingle anything. The new corporation gets a new phone number, new address, sometimes the same. That's where the experience comes in. But in most cases, new phone number, new address, and new contracts. Everything is new, nothing commingled from the old. And we say, hey, IRS, this company can't operate anymore. It owes too much money. It owes you money, and it may owe other people money. However, the corporation has assets titled in the corporate name. A lot of people have personal vehicles that their accountants put on the corporate books for depreciation, but if it's titled in the individual name and it was never transferred, it's an individual asset, not the company assets. So it's very easy to show that a lot of corporate assets are not titled in the corporate name or purchased through the corporation. Then we get a fire sale value liquidation appraisal. Buy it from the IRS, clear the title. A lot of times we don't even clear the title. It doesn't matter. And then we say, there's a new company over here. Nothing was commingled. It was not a new face put on. We didn't transfer any assets. Otherwise, it'd be a fraudulent transfer of assets. We keep everything clean legally down the line. I've done over 100 of these over the years. They work like a charm. And I'm not sure how much more to say. It gets very technical, but I gave you a bunch of technical. That's how it works. You got to be above board.
Yeah, great. I think the commingling is the most important, they needed to take care, because sometimes people, they go to market, they buy all their personal, things they pay by the corporation
Yes.
account card. So that is commingling, as well as the personal money. Even, I'm the CEO of a real estate brokerage company. If a broker, they put in those, transaction, deposit, money, honest money put a personal account. We call those commingling too. So
Yes.
business, example, business, even CEO, CFO, they are traveling all over place. Their personal things needed those corporation card. It's also, they are commingling. A lot of commingling going on right now. But anyway, when we tax report, we will, the agent, IRS agent, they find out those against the law. They will very big problem also. So we should first, that is first rule to learning business, not commingling. That's good, that's good. Okay, now I just wanted to know that, because I'm a political candidate, U.S. Senator, because why I bring you to this show, that I wanted to know in personally, because you are the CPA. I want to know about your field issues. What political leaders they wanted to move more, improve your field, or any IRS issues or any tax report issues you want to say, please? Yeah.
Well, for the last 2 to 3 years, I've watched the IRS kind of go downhill. In the summer of 2020, my power of attorneys weren't being processed by their CAF unit, their CAF unit. Later on, I found out one of the units were trashing the power of attorneys because they couldn't, they didn't have the employees to process them. Also, a lot of returns. I know you could read about it in the paper now, millions of returns that weren't processed. I watched that happen as returns were sent in, and now I pull transcripts, and a year and a half goes by and there's no accounting for them. When I set up agreements, I have to fax the new originally signed returns to automated collections so they could set up the agreement for me. And it gets worse. Like I mentioned earlier about auditors, enforcement agents, collection officers, revenue officers, they're called. They're being put in special assignments now. I'm really afraid that they're going to take a very strong enforcement action that they're gearing up to, because I've known some revenue officers for more than 20 years, and they won't tell me what's going on. They're switching cases. I've got a case with one woman, and then this other one I know has the case, and then they drop the case, and they're telling me if I don't call you back, I'll be on special assignment. So I know, because I keep my fingers on the pulse of what's going on. I know something's going on, and I think politically our government is involved in certain things that have created various government offices to be a lot less efficient than they have in the past. And I believe the IRS is definitely one of them. I don't see much in the near future. I believe I read on the IRS's website today that they were supposed to give a proposal that Janet Yellen said that they had to do about what's going on at the IRS and what they needed to do to fix it. And Friday the 17th was the deadline or something, and they missed the deadline. You probably know more about that than I do. But I witnessed. That's why I'm warning people. I'm trying to go on podcasts and warn people that they're that the IRS is going after people right now, and even collections. They're saying crazy stuff. The managers, I'm having to educate collection managers on rules they're supposed to know. It seems like the last group of years, they're not even educated and trained properly. So, yeah, somebody really needs to. I was listening to the new commissioner they're appointing, and he said, well, I don't know anything. I'll figure it out when I get there. And that's pretty sad, because if you're going to be the new commissioner of the IRS, you better have a good handle on what's been going on already. And,
Great. So can you tell us, many political leaders, myself also, we are fighting for the, many business owners tax deduction, as well as, more deduction, as well as more cut the tax. So now in California, many taxes, we have more than like 20 different kind of tax we have. So can you, like political leader as me, I want to know how we can, as your CPA, can you tell me what is the advice we can give to the people who want to save, as you can advise to political leader how we can fight for the, tax cut and business deductions, all the tax. We tell like, we want to fight for tax, many candidates there, but I think I am studying at the Berkeley, the CPA course is 2005, but I'm not practice CPA. But most candidates, they don't know about tax, all professional education they didn't do. So please say that how we can fight for those tax increase, and then
Yeah, I'm just one person's opinion on this, really, but I think political leaders are really out of touch with what goes on. There's different levels. Political leaders like to, get at the top. They talk about rich people paying their taxes. They talk about different groups to collect taxes from, but there's a difference between theory and practice. And it's very hard to pinpoint, and point the finger and say, this is gonna help us collect more tax, because you got to have a system that operates efficiently. And if we have a system that says, if you pay for a representative that can help you, then the people who can afford representatives, like I've gotten plenty of my clients out of paying taxes that they would have paid and gave up if they didn't hire me. So as long as there's attorneys and CPAs that can use the law to people's advantage, it's going to happen. And you can't just change a law without it being administratively, done properly. I remember when Obama came in and he changed the rule about buying a house and making it taxable, and they found out a couple of years later that the administrative cost in making sure people followed the rules was more costly than they intended. So you've got to have a feel of tax administration before you change laws. If people felt that they should pay their tax and they understood what the taxes are being used for, especially local taxes, then they're more likely to pay. But now, I don't want to get too much in politics, but now when people see where their tax money is going, I've got a lot of clients that are happy not to pay their taxes. And you've got the political arena of where the money's going compared to the law, compared to administration. I don't envy you one bit in trying to get to a solution on that. I've always believed that if the IRS was run like a normal business and was more efficient, they would collect the taxes that they need. I've seen over the years, I've done this since the early 80s. Okay, I've seen such weakness in administration. I've always told revenue officers, let me get a percentage of what I collect, and I'll collect the money for you. I'll give you a good example. Over the years, I've had many clients that were 3, 4, 5 quarters of payroll delinquent. And I've always said, well, where were you when they were first delinquent? Why are you chasing them now when there's $150,000 owed? When they first didn't make their payroll deposits, you should have been chasing them. So the inefficiencies in the system, I think, are the real key things. But again, that's just my opinion.
Great. So, I want to share my personal experience. I learning many business. I have one audit experience.
Okay.
I think the agent, they too much spending my time, because end up they find like $1,000 on. And I'm not agree $1,000 to own, and then I go file to tax court, and finally people go to court, they dismissed. But anyway, our tax 9 hour there is higher many independent agents, they
Right.
dealing with the individual 1099 or whatever the most they audit 1099 because
Right.
there is a lot of complex taxes. So, my personal, experience, I think that we are wasting labor, we spending too many hours, my time. I have the learning business. I have the meeting tax audit. They are randomly, they are not select my business Pacific region, they are selected random person. I think that is 2011, you know. So I think 2011, 12, 13, we settled down 33 years. I fight with the IRS agent to explain, bring all the document, you know. But end up only $1,000. They asked me to, because $1,000 pay some,
Right.
you know, their time is maybe covered. I don't know. So I am not agree. So what, you know, our politic leaders or our, you know, we need real revolutions, really solve those, you know, a lot of now I think that this year, last year, they many because of they find out those problems in government, in the Biden administration, President Biden administration, they many you know lay out or fight you know, not working for agent that much, wasting their time. But I think the you know, the I am the owner. I have to learning a lot of business, but I have to go to like example in downtown. I think that I go downtown or like Glendale office, you know, tax audit office, bring my attorney. It's a lot of money, lot of time, and then later on, you know, bring my CPA. It's a lot of time, but end up only 1,000.
Well,
Later on, we don't even,
compliance.
yeah.
But they have to check compliance because they don't know that. And what if you committed fraud? They have to use that as a deterrent to other people. There's other considerations beside just the tax that you pay that they have to comply with as an agency. Plus, it's too politically oriented. They wait for the
Yes,
next
yes.
president
So
to
anyway,
come
so thank you for our
in.
time is already gone.
Oh,
Thank you so much
sure.
your the support, and then see you next time again. Okay, thank
Yes, I
you.
would be
Thank
happy
you.
to.
Thank
Good
you. Bye
luck to
bye.
you. All right.